All right, welcome. All right, so today we are going to be talking about I'm probably going to take out this profit when it gets to this level here. Where we're going to know more about this one when we start talking about breaker block and all that. All right. So, like I was saying, we today we are going to be talking about fair value gap and order block. We need to really understand that concept because it is very important. Now we understand market structure. Now, the next thing we need to understand or know so well is fair value gap and order block, right? Because they are real point of interest that the market is going to be reacting from. So for that, we are going to be using, let's go to GBP and ZD here. We're going to check different markets, but I'm going to start with GBP and ZD here to explain fair value gap and order block, right? Now, guys, one thing you should understand, or one thing you should know if you want to become a very profitable trader is, my network is a bit slow here. One thing you should know is, or one thing you should note is point of interest is a very, very important concept. You need to understand what point of interest is, where you should be looking at. Now, knowing the bias of the market. Bias of the market means, is this an uptrend or a downtrend or whatever, or whatnot? Knowing the bias of the market is not enough. Is not enough. I'm currently on this trade too. As you can see, we're expecting this market to give us a push to the downside. We're expecting this to happen. But then knowing the bias of the market is not enough, guys. We need to be able to tell, okay, where am I interested in? I think I've talked about point of interest before, but I'm going to talk about it again. All right. Now let's do a little bit backstory on market structure. Right. On market structure, we say point of interest is this. We have what? Lower low, lower high, lower low, like this. So where is the point of interest in this diagram? Where is the point of interest in this diagram? Right. You should be able to know what's your point of interest or where your point of interest is. The point of interest in this diagram is your recent highest points. This is my recent highest points, and then my recent lowest point. This thing is going to save you a lot, guys. This is my point of interest. Of course, we know in a downtrend that we're expecting to see what? A break of structure. We're expecting to see a pullback, and then what? A break of structure like this. All right. But then if you need to be able to mark out that, okay, this is my point of interest. Everything happening in here is internal structure. We're going to take that as a topic later on, but we're not going to be looking at that today. We're going to take that as a topic of its own, point of interest. Point of interest. So I want us to finish with order block and fair value gap before we now go into point of interest. So let's get back to order block and fair value gap. Let's go to the weekly time frame. I want to show you how important this is. Right, this is a very, very important concept and a very, very important topic. All right, let me switch my network here. Let me switch my network. Okay. All right, like I said, it is a very, very important topic that we need to really understand. That's why I'm taking my time here to explain this properly. That's why I'm taking my time to explain this properly. If you're watching on YouTube, uh, I'll be posting this on YouTube also. All right, I'll also be posting this on YouTube. So fair value gap and order block. Let me write this down. Fair value gap, fair value gap, and then order block. All right. Now, one thing you should know about the forex market is the forex market needs to be efficient. There's something called efficient and inefficiency in the market. All right. Hold on. Coming. Let me reply to this person. There's something called efficient and inefficient in the market. Now, guys, one thing you should know is we already understand what market structure. Now, we understand that this happens in an uptrend. We understand that we're going to be having higher high, higher low, higher high. Now, this is how a real market is supposed to be. This is how a real market is supposed to be. Let me just draw a diagram. We have higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now look at this. This is an efficient market. Why is this efficient? Because there is no space. It's filling up all the gap. There is no gap here. There's supposed to be no gap in this leg. This leg now, there will be gap in this move, and it's supposed to be filled. And I'm going to show us an example. Now this is an example of an inefficient market. So you're going to have something like this, higher high, higher low. You're going to have this move like this. You will have something like this and a continuation. Now there's a gap here that has not been filled. That's why you're now going to see sometimes that this. So sometimes when the forex market do not respect market structure, it's because of inefficiency. Because this thing can now happen like this. You can now see something like this and a continuation like this. And then you know, like, what is going on? Why did this one change character here and then continue going up, right? It did not change to a downtrend. It changed character, but it did not continue going down. Instead, it later continued going up because there's an inefficiency or there's a gap here that the market needs to come and fill. And it has done its course. It will always fill a gap. Any gap you see here, the market will always fill it. Now, let's see examples of that on the real chart. Let's see examples of that on the real chart. Now, let's go to, this is GBP NZD. Let's start from here. Let's start from here. Look at this. Look at this move here. We're going to check other markets, but I like to use this one because this gives a perfect example. Look at this. Now, what you want to note before you can find out a fair value gap, before you can check out a fair value gap is, guys, you are looking for a candle that moves like this, a strong candle, one candle that gives us a very good push to the upside or to the downside, whether up or down, right? Uptrend or downtrend. Look at example of those candles. This one, look at this, how long it is. Look at this one too, how long it is. Look at this one. All this long candle will give you gaps. All this long candle, right? You're looking for gaps in all this long candle. Now let's go back to this one. We're going to look at various examples. Look at this candle here, a very long one, whether bullish or bearish. It was a long candle. Now, what I'm looking for in this candle is I'm going to look at the candle before that long candle and the candle after that long candle. Now, this is the candle one and this one. Let me call this one A and C. So I'm looking at A and C. This long candle is the B. So I'm looking at A and C. And I'm just going to take out this line. I'm going to put it on A, where A ended, where A, the top of A, and the end of C, the bottom end of C. See, as long as they did not touch each other, I didn't mean this one here is long, this weak here, touch or intercept with this one here, there was no gap there. But this one, look at this space here. The space in here is what we call the fair value gap. The space in here is the fair value gap, as you can see. Now, look at this one here now. Let's look at another level. Look at this one. Where is the gap here? This one is longer than this one here, as you can see. But then look at the space in there. The space in here is this. Look at it. A, B, C. This is C here. I'm going to put this thing here. And look at this one. This is the gap here. As you can see, this here is the gap. All right. So you need to be able to understand the gap there. Now, that's the gap. Now, one thing this gap will show you, one thing this gap is telling us is there's an imbalance there. There is imbalance there, and then the markets will eventually come back to that level. The market will eventually come back to that level. And then look at what then later happened. The market went up, came back to that level. Came back to that level, as you can see. It came to fill in the gap, as you can see. The gap was filled. Now look at here too. There was what? A gap here, as you can see. A, B, C, right? This is C here. And this is A here. And there's a gap in there. This is the gap. And the market even quickly what? Fill in the gap, as you can see. Hold on 1 minute. As you can see, the gap was filled. Hold on, let me just quickly do this transfer. Okay, the gap was filled right there, as you can see. Let me check on my trade right here. Let me check on this gold. Okay, so the gap was filled, as you can see, was filled. And then look at this, there's another gap here. There's a tiny gap here, as you can see. And what do you see here? The gap was filled, as you can see. Filled. There's another gap here, as you can see. And what happened? The gap was filled. So those gaps serves or as what? Our point of interest. So if I'm to draw, if I'm to drag out, if I'm to draw my fair value gap, if I to note my fair value gap, I use this one instead. I use this to fill in the gap. It serves as what? My point of interest. Look, that's my point of interest right there. Now let's continue here. Is there a gap here? That's the question. Is there a gap here, guys? Look at this. Is there a gap here? I want us to answer this question. Is there a gap here in this move? Is there a gap in this move? Please let me zoom in. Let me zoom this in. I want a chorus. I want an answer from us. Do you think there's a gap here? You don't have to be correct. Do you think there's a gap there? Do you think there's a gap there? Guys, are you guys listening to me? Do you think there's a gap there? Okay, I'm seeing yes. Let's see, where's the gap here? Guys, look at this. Look at this one. So you guys might think, oh, there's a gap here, but where are we going to use it against? There's no A here. So this one is not valid. So let's say this is a candle here. Look at this. We have this one. Okay, you guys are grabbing. I think there's actually a gap there. Yeah, there's a gap there. Look at this. This is our A, B, and C. There's actually a gap there. And as you can see, the market tap into that gap. As you can see, the market tap into that gap. The market tap into that gap. You guys are following. Now, look at this. Is there a gap here? Obviously, there's a gap there. This is our C. This is our A. There's a gap there. Look at the market tap into that gap and start going up. So this is not rocket science, guys. It is not rocket science. This is another gap here. And then the market what? Tap into it, fill the gap, as you can see. It serves as a point of interest. It serves as a demand zone. This is what we call demand zone, right? Demand zone. This is a demand zone, right? As you can see. This is another gap here. As you can see, the market taps into our gap. So anytime, guys, anytime we see a move like this, let's say it's an uptrend, right? We see higher high, higher low, higher high. What are we looking for, guys? What are we looking for? We are looking for, is there a fair value gap here? And then let's assume we find what? Our fair value gap. Like this, it becomes our point of interest. We know that the market is going to at least fill in that gap before what? Continue going up. That serves what? As a point of interest. That serves as a point of interest. That's one thing you should understand. That serves as a strong point of interest. Strong point of interest. So let's continue here. So we now understand how to locate what? Our fair value gap. We now know how to locate our fair value gap. We now know how to locate our fair value gap. Now, the next thing we are going to try and locate is order block. Because, of course, we are talking about fair value gap and order block. So we understand what fair value gap means now. So what is order block? What is order block? If you understand now what fair value gap is. Now, let me show you. Let's go back to that chart. Let's go back to that chart. Again, we're still going to be looking at more examples on more charts. We're going to be looking at more examples on more charts. Okay, so we say this is our what? Fair value gap, right? We understand that this is our fair value gap. Like this, right? This is our fair value gap. Now, where is order block? Guys, that's A candle, right? This is A, B, C, right? The A candle, the candle you tamed or you named A, the entirety, the whole of that candle A becomes your order block. The whole of that A candle becomes your order block. And guys, order block serves as a good place, a good point of interest. We use order block more. Order block gives what? Give good risk to reward. Now look at this. Look at how the markets tap into now. If I want to enter this, if I want to enter this trade, let's say I want to enter this trade with fair value gap. This is my fair value gap. Like this is my fair value gap. I want to enter this trade with fair value gap. This is how I would enter the trade. I would enter the trade like this. My stop loss will be just below your gap, and then you target the high here, take profits. But then look at what happened. The market tapped into our fair value gap, went up, came back, and it would have taken our stop loss. That it would have taken us out of the market before it now finally started going in our direction. Now, if I were to use this, if I were to use order block, my stop loss will be here, my entry will be here, and my take profit will be there. Look at how this is. We won't even see any drawdown. We won't even see any drawdown. And this will be a very good risk to reward. We would have entered or take our profits here. We would have taken our profits here. Our entry will be here. We would have taken our profit here. No drawdown at all, as you can see. This is a perfect entry. But then one thing you should know is if you are using your order block, you would miss out on a lot of trade. Now, let me show you an example. Look at this. Look at this trade, for instance. Look at this one. This is our order block here. Well, as you can see, the market did not tap into our order block. As you can see, you will miss out some trades. And that is why sometimes not all the trades you will be able to take, right? Depending on which one you're using, order block or fair value gap, you will not be able to tap into all the trade. Look at this one. We would have been able to enter this trade, tap into this trade very mildly. We'll be able to enter this one. This would have been a very good one, a good risk to reward. And let's see this one. We would have missed this trade because it did not tap into this trade. And then let's see this one. Would have missed this one too. It did not tap into it. Would have missed this one too. And then would have entered this one. This would have been a very good one. As you can see, this is a very good one here. Would have entered this trade and would have taken our, we'll still be waiting to take profit to get taken. All right, as you can see. So the whole bottom line here is just understand the concepts. Then we have not gotten to the level where we are going to be seeing, okay, which one should we be using, order block or fair value gap? We are not there yet. We are just locating what order block and what fair value gap is. That's just it. Now let's look at few more examples. Let's look at another market. Let's go to gold, SAUSD here. Let's go to SAUUSD. Let's go to SAUUSD. Now, let's find out where our order block and fair value gap here is. Now, look at this one. Let's start from here. Let's start from here. Here we have what? A gap here, a tiny one. As you can see, the market respect. Now, one thing you should know is, let me just give you guys this expo. One thing you should know is the market respects fair value gap on the higher time frame. When we are checking the higher time frame, the market respects fair value gap. But when you are checking the lower time frame, the market respects order block. So that's one thing we are going to just have that at the back of your mind before we continue. All right. So look at this. The market tap into this one. It's a perfect entry. It's a perfect entry. Now look at this one. Are there gaps here? Now look at this. Let me show you an example. Look at this one. There is no gap. This one here entered. They are meeting. Anytime you see them meeting or touching each other like this, it means there is no gap. So this one is not a valid order block. And if there is no order block, there is no fair value gap. Look at this one. A tiny gap. Very, very tiny, right? Very tiny. Look at this one. No gap. This one, the gap has been filled. As you can see, this is the gap here. It has been tapped into. Look at this one. This gap too has been tapped into. This is the gap here. The market respected the gap here. The market respects the gap here, the fair value gap instead of order block. This is a weekly time frame. I told you the market will respect hold on guys, give me a minute. Someone's at my door. Okay, note how the market respects what? The fair value gap here. Then let's see what is happening here. Look at here, there's also a gap here that the markets respect. But if you are using if you had used just the fair value gap here, you would have lost the trade. But then look at order block. This would be our order block. And then the markets would have, So we know I'm going to be showing you guys how to use both. Guys, I'm going to be showing you how to use both, how to understand, okay, when should I use order block, and um when should I use order block, and when should I use what's it called? Fair value gap. All right. So I'm going to be showing you guys when to use when. Now look at where the market is going. Look at this. We are going to be selling a lot. This market is going to crash a lot here, because here we have what? Guys, again, if you know what is good for you, be ready when the market is going to be selling on gold. When we are going to be having a crash on gold, be ready, because we are going to make a lot of money on gold, because gold is going to crash around this level. Look at this. There's what? There is a fair value gap here. What is this telling us, right, guys? What is this telling us? This is telling me that at some point in the future, the market is going to what? Come back to this level before it continue going up. It's as simple as this. Trading is not difficult. It is very simple. This here is a valid point of interest. Let me even lock this place. Let me lock this. Let me lock this. This is a valid point of interest. That is what point of interest is. This place is where I'm interested in. I know the market at some point is going to come back to this level. It's going to come back to that level before it continue going up. There's a lot of imbalance here, a lot of imbalance. And the market will want to do what? Correct itself. There's going to be a correction that's going to happen here. All right. So that's that. So we need to be able to understand that. All right. Hold on. I want to close some position on this gold. 0. All right. So at some point, the market is going to come there. Guys, are we understanding this at all? Are we only going to look at the latest low or the highest, or do we first look at the fair value gap that has not been filled? Okay, please, you can let me give you a chance to talk, to explain your let me give you a chance to unmute. You can now unmute yourself to talk now. So I want to really understand your question. You can unmute yourself.
Can you hear me?
Yeah, I can hear you. I can hear you.
Okay. I was asking that when we come to the chart and want to look for where, if we're going to be placing trades and all that, are we just going to look at the latest highs and low and look for the fair value gap there? Or do we have to go back and make sure that there's no fair value gap that have not been filled first to know what we're going to do?
Yeah, that is a very, very brilliant question. That's a very brilliant question. Now, to answer your question, now that is why top-down analysis is very important. Now, let me look at a fresh market. Let's go to another market. Let's go to another market. Now, look at this market here. Let me get all this diagram off. Okay. Now, look at this market here. Guys, that's why you need to be able to do your top-down analysis. I would not advise you start from the weekly. Of course, you can start from the weekly, is just not too relevant. But then starting from the daily, let's look at this one. Now look at this one here. Look at this one. What you want to look at on the daily, right? Let me look for a much more clearer one coming. Let's see where JPY coming. I want to look for a one that is going to give me perfect. It's going to give me a perfect. Okay, let's see Euro USD. Okay, now look at this one here. Euro USD. Let me get all these lines off. And we're still going to be getting to top-down analysis, but then I want to really try to explain your question properly. Now, look at this one here. there's an imbalance here. Look at this. There's an imbalance here. Look at this. There's a gap here. And there's even a gap here. Look at this. Does it mean that I'm going to be waiting till the market gets to this level? No. The market has continued going up. It has continued. Does it mean that sometime in the future, the market is going to crash down to this level? Definitely. The market is going to feel this. Look at this. Something like this is going to happen later on. This move that happened here, this crash that happened here, is to fill in some imbalance. If you go down into the past, if you go down to the past, is to fill in some imbalance that the markets refuse. Look at the hair. Look at this. Let me show you an example. Look at this here. There's a gap here. All right. Let me use this line even instead. Look at there's a gap here. Okay, it has not even filled this one, as you can see. It has not even filled this one. But then let's see what this level came to fill. Let's see. Aha, there's another one here. We have a gap here. All right. Look at this. Look at this. So one thing you should note is the market will later in the future come back to fill in those gaps. But then does it mean that the markets will just come back very like right now? No. But look at what I am doing here. I'm going to, of course, the market can literally later still come here, but then I'm not concerned about that. I'm concerned about the current move here. Now look at this. Let's draw our path for this one. We have higher high, higher low. We have higher high, higher low. Then we have this higher high. So we're expecting what? This higher low. So what I'm concerned about is this move on the daily time frame. That is why top-down analysis. I'm not concerned about this other move or this one. If there's an imbalance here, I'm not concerned. If there's an imbalance here, I'm not concerned. I'm concerned about this move here. So you don't have to worry yourself about all the imbalance that has happened later in the previously before. No. You're concerned about this leg, this move. Because now this becomes my point of interest. The recent lowest point and recent highest point. That becomes my point of interest. Guys, this is how you do your chart. From the daily time frame, I'm setting it up like this. So now what am I looking for? Is there an imbalance in this move, in this leg? Let's check. Of course there is. This is it. Right here. This is our fair value gap here. So this gives me what? A good point of interest. A good what? Point of interest. Now I can even use this one like this because it did not, if I do it like this, it does not fill it has to, see, for this one, for me to consider that this one here has filled the gap, but because the gap does not necessarily have to be totally filled. But then for me to consider that this move here has filled the gap, it has to at least get to 50% of, it has to get to what? 50% of the gap. It has to fill 50%. So you have to get to at least this level. If it did not fill at least 50% of it, it does not fill it, right? So this becomes my point of interest. Remember, I said I am looking at fair value gap on, I'm looking for at fair value gap on, when I'm on the higher time frame, my point of interest is the fair value gap to order block. But then when we start getting to lower time frame, like the 1 hour, the 4 hours, the 15 minutes, we are then going to be using the order block more. Because order block gives good risk to reward, and most of the time on the lower time frame, the market will expect your order block to your fair value gap. But on the higher time frame, the market will expect what? Your fair value gap. All right. So, but then of course, we still have entry signal. We are not just going to be entering the market once the market start getting to what? Our point of interest. We are going to be waiting for entry signals. Entry signals. Now let's see this. Now look at this. This is our point of interest, the recent lowest point, the recent highest point. Everything happening inside, like this, everything happening inside here becomes internal structure. This is how top-down analysis works. I start from my daily time frame. I mark out my point of interest. I know that the market is going to, at some point, get to this level. I know. So what I'm just doing is, I'm going to work my way down to see if I can even see a selling opportunity to sell to this level. Remember, I'm on the daily time frame, right? So what I'm just going to do is I'll go down to the 4 hours time frame, and then look at what is happening on the 4 hours time frame. On the 4 hours time frame, this internal structure on the 4-hour time frame becomes its own structure. It's now a downtrend. This thing looks like this is a downtrend. Now look at how I'm seeing this, how I'm viewing this. From here, we have our lower low, lower high, lower low, lower high. What are we expecting here? A lower low like this. And then once this, I find an entry signal here, I am riding this towards this fair value gap because I know it's going to get here. That is how trading works. It is not rocket science. So what am I looking for here? Now look at this. Let's see what is going on here. Now look at this one here. Look at this. In this move here, we have lower low, lower high, lower low, right? In this move here, do we have what? Do we have a fair value gap here? Yes, we do. This is our fair value gap here. And as you can see, the market would tap into our fair value gap. Tap into our fair value gap. But for me, I still believe that the market might still take out our other block in this move. But then let's see what's happening. Now let's see what is happening, right? Now this becomes, remember guys, remember, I don't want you to get confused here. Remember, from here we have our lower low, lower high, lower low, right? We're expecting what? A lower high to happen, right? That's what we're expecting. But then look at this, becomes my point of interest. You always draw your point of interest. The recent highest point is a downtrend, remember. Let me get this one off. The recent highest point in this move, and then the recent lowest point. This is what I'm interested in. I'm getting point of interest in point of interest, as you can see. So this becomes my new point of interest, right? My new point of interest. So what do I do then here now? I go down to the lower time frame. I go to the 1 hour time frame. Now, this move here becomes an uptrend. This move here becomes an uptrend. And now, what am I seeing here? Just watch. What am I seeing here? I'm seeing from here, I have this small higher high, higher low. I can just call this my higher high, like this, higher low. Now, this one has to break structure. So we have what this, okay, there's a break of structure here. We have higher high, higher low. We have this higher high that tapped into what? That tapped into my fair value gap, right? That tapped into the fair value gap. And then we have this low, and then we have this one, and then we have a change of character. Change of character. Now, change of character is telling us that the market has now want to change from an uptrend to a downtrend, which is what? Collaborating with our analysis. We understand that we are looking for perfect opportunity to sell because we know the market is going to sell to this level. So what are we looking for, guys? We are looking for, in this move here, there's a change of character here. We already know that. From here, we have our lower low, lower high, lower low, like this, right? Change of character, right? That gave us this change of character. This becomes our change of character here, right? This is our change of character that's broken through this. So we're expecting to sell now, but we're not just going to start selling because we know in a downtrend, we're expecting to see lower low, a pullback. This lower high we're expecting to see before this. We're looking for perfect place to sell here. So where are we going to be selling? How are we going to sell here? Now let me show you. We're just going to look for, is there any point of interest in this move? Is there any point of interest in this move? Let's see. Let's see, is there a fair value gap here? Look at, there's a tiny one here. As you can see, there's a tiny one here, a tiny one here. There's another one here. But then we are going to be using the extreme one. So there's a fair value gap here, which means there's another block. Yes, I told you that we're going to be respecting the other block on the lower time frame. So I'm going to be using this other block. So what am I waiting for? I'm waiting for the market to, before I'm going to sell this market, before I'm going to sell this, I'm waiting for this market to give me this, tap into this. This is going to be my entry signal before I then sell. So one thing is, don't let all this thing confuse you. This market is giving us a push to the downside here now. Don't let this confuse you. Just wait. Guys, again, it is not all the time you are going to get an entry. You are not going to get an entry all the time. This one now, the market could decide to what? This market could do this. Continue going down like this, and then later come here like this, and continue like this. So don't get confused with all this happening. Trading or forex trading is more of waiting than trading. Do your analysis, wait. Is more of waiting to trading. Is more of waiting to trading. You just need to be able to understand this thing properly. Guys, again, you might not get this the first time here now. You might not get this right now because we are just still explaining order block and fair value gap. This is not, we are not bringing everything together. There's still a lot of things you need to understand. So just one step at a time. It is one step at a time. You do not have to rush, one step at a time. All right. So let's continue here. Let's see we are going to wait for this to get here. Let's see what we're looking for on gold, SAU USD. Let's see what we're currently on a trade on gold right now. So let's see. As you can see, we are currently driving this on gold. Now, why did I enter this trade on gold? Gold has been giving us what? An uptrend ever for a long time. As you can see, we have been taking, look at this. Why did I enter this trade? Let me show you why I entered this trade. Because there is what? A fair value gap here. As you can see, a fair value gap. That's why I entered this trade. And what happened? The market went up, tap into my fair value gap. I see. Do you see? Perfect entry. Now, again, I was supposed to use order block for this entry, but I used fair value gap. And I'm going to be showing you when and how you can use fair value gap and order block. Guys, look at this. There's also a push here. Guys, I did not take this trade. Why? Because I missed out on this trade. Because look at, there's also a gap here. And this is a perfect entry. This is an order block here. An order block entry here. But I did not take this trade because I was not on my chart when this trade happened, because this was a perfect entry. Look at this. The market gave us this push, a retracement. Now, look at what's happening. Now, look at this. Why did we not look for an entry here? Because look at this. There is no fair value gap or order block here. There is none here in this move. If you check very well. Now, there is one here. But then, again, it is the ones that are valid are the ones that are the extreme. If you see any order block or fair value gap here, you should not just respect them. You are looking at the one at the extreme. Look at, in this move, we have higher high, higher low, higher high. You're looking at the extreme order block and fair value gap, the one at the bottom, right? Now, let's see if there's anyone here. Is there anyone here? Yes, there is one here, right? But then, of course, it was this one that the market respects. And I'm going to show you exactly how to be able to catch all those ones, right? I'm going to be showing you what valid and invalid fair value gap and order block is, the one the market is going to respect and all. Today is just about locating them, knowing how to recognize them. All right, knowing how to recognize them. Now, look at this one now. Look at where the trade is currently at. Why did I enter this trade? Why did I enter this trade? Look at this. There's a tiny fair value gap there, which means there's also an order block right there. Look at this. But then I missed this entry. So I looked for another entry opportunity. I looked for another entry opportunity, which I got. Let's go down to the 15-minute time frame to see. So when the market got into this, again, sometimes we do not just enter the trade when the market gives us what? When the market gives us an entry. Sometimes we look for what? Entry signals. I'm going to be talking about entry signals later on. I'll not talk about entry signal today. I'm going to talk about that later on. I don't want to pack us with too many information. So guys, do we understand the concept of fair value gap and order block now? Do we understand? Do we understand how to locate them now? All right, exactly. Now, this is going to be our assignment. This is going to be your assignment. Just open any chart, and try to go to daily time frame and try to locate your fair value gap and order block there. And then send them to me in my DM. Send your assignment to me in my DM. Try to locate your fair value gap and order block and send them to me in my DM. Now, a lot of people are not here to, in this section, and this section has been very, very interesting. So it's being recorded anyway, and I'm going to be posting the recorded version on YouTube. All right. So tomorrow we are going to be talking about another interesting topic. We're going to be talking more on point of interest, and we're going to be talking more on point of interest actually. And we're going to be talking next, and the next class we're going to be having is on liquidity. Liquidity, that's another important topic, liquidity. So we're going to talk about liquidity to understand that properly. And then once we understand that properly, we're then going to talk about top-down analysis, and then we're going to talk about entry, and then we're going to bring everything together to form a perfect strategy. So we're going to be taking this one step at a time. Now, guys, look at this. The reason I'm so confident about this is there are a lot of imbalance in this move here. There are a lot of imbalance in this move. But then there's a breaker block here. That's why I'm putting this here. We're going to be talking about breaker block later on. That's another important topic. Again, I think we're going to talk about breaker block before liquidity. All right. So that is that on that, guys. I hope you have been able to learn something interesting today. We're going to see again in the next class. Make sure we do our assignment. So thank you, guys. Mm.